Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today we're looking at AST SpaceMobile.
If you find our talks useful, please consider subscribe, like, and comment underneath.
Right, so just jumping right in. Imagine trying to value a company that is currently building a multi-billion-dollar cellular network.
Which sounds completely normal until you realize the construction site is floating like 300 miles above your head in low Earth orbit.
Exactly. And their current revenue is, well, it's essentially a rounding error.
Yeah, it's wild. How do you accurately evaluate a hypergrowth company that is literally trying to build a cellular network in space?
It is honestly one of the most difficult challenges in modern investing. You are dealing with these massive binary outcomes, astronomical capital requirements, and technological frontiers that just haven't been fully mapped out yet.
Right, you can't just look at their retail inventory or foot traffic to figure out what they're worth, which is why we rely on robust frameworks to process this stuff.
Yeah, and before we really get into the weeds of the business model, we should mention that to track all this, we use StockOracle. It's an AI-aided stock research platform.
Totally. And we need to be super clear here. It is not financial advice or a trading signal service or, real-time market data. It's a research tool.
Right. There is a special 14-day trial link below in the description. Just keep in mind it's an affiliate link, so we might earn a commission at no extra cost to you.
And remember that AI insights and valuation estimates can be incomplete or wrong, so you always have to verify the important facts yourself. Okay, so setting that wealth-building context, let's unpack AST SpaceMobile, or ASTS. What is their actual mission?
So their mission is to provide space-based cellular broadband directly to your everyday smartphone.
Meaning no special equipment, right?
Right, exactly. No giant satellite dish strapped to your roof. Just the phone that is already sitting in your pocket.
Which is a huge distinction because they aren't just trying to provide emergency SOS messaging, like if your car breaks down in the desert. We've seen other companies do that.
Yeah, SOS is cool, but ASTS is attempting to deliver true broadband. The sheer scale of that ambition is what makes this analysis so fascinating.
Let's look at the fundamentals and the hardware first, because we really need to separate this from a basic satellite phone. They're launching these new satellites, right?
Yeah, they are currently in the process of launching what they call their Block 2 Bluebird satellites. And the physical specifications on these things are staggering.
Staggering is a good word for it.
They carry these phased arrays that are 2,400 square feet.
I mean, that is literally larger than the floor plan of most single-family homes, and they have to fold this massive thing up, pack it into a rocket, launch it into the vacuum of space, and then unfold it in orbit.
Which is an incredible feat of engineering. But let's pause on that term, phased array, because I know that sounds like pure science fiction.
It really does. What does that actually look like?
A phased array is basically a massive flat surface made up of thousands of smaller individual antennas. So instead of physically turning a giant satellite dish to point a signal at a specific city on Earth.
Right, moving the whole satellite.
Yeah, they don't do that. A phased array uses software to electronically steer the radio beams in microseconds. These are the largest commercial communications arrays ever deployed in low Earth orbit.
And the size isn't just them showing off. There is a very specific physical reason they have to be the size of a house. And it all comes down to the device on the other end, which is your smartphone.
Exactly. Because the antenna in your smartphone is incredibly weak. I mean, it's designed to connect to a cell tower that is maybe a mile or two down the road, not a satellite 300 miles up in the sky.
So the satellite has to do all the heavy lifting.
Right. That 2,400 square foot array basically acts like a giant magnifying glass in orbit. It's capable of catching the tiny, super faint signal coming from the cell phone in your pocket.
It's like trying to hear a whisper from space. And because of that massive array, they're designed for peak download speeds approaching 200 megabits per second.
Which is incredible.
Yeah, you could theoretically stream high-definition video directly from a satellite while you're sitting in a tent in the middle of a national park.
Which brings us to their competitive position, or their moat. The data highlights a three-layered structural advantage for ASTS.
Okay, let's break those down. Layer 1 is basically the invisible real estate they own, right? Their spectrum assets.
Yes. They hold some of the most valuable low-band cellular spectrum among all their space-based peers.
And we should probably explain the actual physics of why low band matters so much. I always like to think of high band spectrum like a Ferrari.
Oh, that's a good analogy.
Right. It's incredibly fast, it carries massive amounts of data, but it uses very short, tight radio waves.
And those tight-waves are super fragile. They literally bounce off a pane of glass or a tree leaf or a brick wall. Like, if the Ferrari doesn't have a perfectly smooth, straight road, it just crashes.
Exactly. But low-band spectrum is more like an off-road Jeep. The physics are entirely different. It uses long, rolling waveforms.
It might not have the absolute top speed of the Ferrari, but those long waves can physically pass straight through concrete walls, heavy foliage, whole buildings.
So ASTS holding this low-band spectrum means they hold the specific frequency that actually works inside a concrete tunnel or inside your car.
It is a massive regulatory advantage because you can't just invent new spectrum. It has to be allocated and approved by governments, which leads perfectly into the second layer of their moat, which is their carrier ecosystem.
Right, because they aren't trying to replace your current cell provider. They are deeply integrating with them. The numbers here are just huge.
Over 60 mobile network operator partnerships. We're talking AT&T, Verizon, Vodafone, Google.
That covers roughly 3 billion subscribers globally.
And it creates immense switching costs. These agreements aren't just handshakes. They include revenue sharing models and capacity pre-purchases. The cumulative commitments already exceed $1.2 billion.
Think about the network architecture involved there. Once a giant like AT&T hardwires ASTS's satellite routing into their terrestrial network, the friction required to rip all that out and switch to a competitor is just monumental.
Exactly. And then the third layer is the manufacturing itself. They are building roughly 95% of their satellite technology in-house.
So they aren't just acting as a general contractor, buying off-the-shelf parts and snapping them together.
No, keeping that vertical integration gives them total control over their supply chain and their intellectual property. They own the factory, they own the patents, and they control the timeline as much as the literal physics of space launch allows.
Okay, I hear all of this, the massive arrays, the wave physics, the billion-dollar partnerships, but I really have to push back here on the financials.
Let's do it.
How do you actually value a company that is still in a pre-commercial build phase? I mean, they are building these off-road Jeeps, but they haven't actually sold any to the public yet.
That is the multi-billion-dollar question. Evaluating hypergrowth like this is a precarious exercise. The market is being asked to price in a very distant future.
Because if we look at their revenue trajectory, it's scaling from a baseline of practically zero. In Q1 of 2026, they hit $14.74 million in revenue.
Which is a massive percentage jump. It's nearly 2,000% year over year. But in absolute terms, $14 million for an aerospace company building a global network is nothing.
It pays for a fraction of one rocket launch.
Right. But the market is forward-looking. Management's guidance suggests that by 2027, as they roll out broadband in major markets and secure larger government contracts, revenue could approach $1 billion.
A billion is a real number. But to get from 14 million to a billion, they are burning cash at a terrifying rate.
Over the trailing 12 months, their free cash flow was negative $1.19 billion.
Wow.
And the net margin is negative 573%.
When you see numbers like that, it is so easy to just panic. When a stock swings this wildly based on cash burn, you can't just track it manually. This is why people turn to AI platforms like StockOracle to sift through the noise.
But here is the thing. If you run ASTS through a feature like StockOracle's OracleIQ, which color codes financial health, that system is going to flash bright, blinding red on a negative 573% margin.
Oh, for sure.
But then it would likely flash bright green on their balance sheet. That contradiction is the absolute essence of investing in frontier tech. You have to understand the mechanics behind those negative margins.
Right, because their cost structure right now is entirely dominated by building the constellation. It's not that their daily corporate operations are wildly inefficient. They are building a global factory from scratch, and the factory just happens to be in orbit.
And they recently secured the ultimate safety net for that construction phase.
Yes. The convertible note offering in June 2026, they raised $1.15 billion. And when I saw the term sheet for this, the interest rate actually stopped me cold.
1.625%.
It's insane. That is an extraordinarily low rate for a pre-revenue company burning $1 billion a year. It's lower than a standard mortgage.
Well, institutional investors aren't running a charity, right? If they're taking 1.6% interest on $1 billion, it's because of the convertible part of that note.
They're trading that high interest yield for the option to convert the debt into company stock later on.
Exactly. They are making a massive bet that the stock price is going to explode upward. Wall Street does not hand over $1 billion at 1.6% unless they see a highly de-risked path to massive future profitability.
And because of that capital raise, ASTS now has pro forma cash and cash equivalents of over $3.8 billion.
They have the runway.
Yeah, they have $3.8 billion in the bank just to finish building the constellation.
They do, but we need to introduce a heavy dose of caution here on how people model that future profitability.
Definitely.
If a user feeds this data into something like StockOracle's OracleValue feature, which uses discounted cash flow models, the output for a hypergrowth company like this can be incredibly volatile.
Right, because a DCF model is essentially just trying to figure out what a company's future cash is worth today.
And since ASTS's current cash flow is deeply negative, the model relies almost entirely on those massive 2027 projections. If you tweak the revenue estimate down from $1 billion to, say, $500 million, the AI model completely changes its valuation today.
Which is exactly why AI insights can sometimes be incomplete or just flat out wrong when dealing with frontier tech. You have to verify the context yourself.
Right. An AI might flag that the company is heavily in debt. Total debt is around $3.02 billion. But a human analyst understands that $2.9 billion of that is locked in at incredibly favorable terms, matched against $3.8 billion in cash.
So the foundation is robust, but man, the technicals on the public market have been like a roller coaster. Let's talk about the recent price action and sentiment.
It has been brutal lately. In May of 2026, the stock hit a high of $133.86. But recently, it plunged 56%, dropping down to roughly $59.
A 56% haircut.
Mm-hmm.
And that was driven by a very tangible physical setback.
Right. Yeah. They were targeting the deployment of 45 operational satellites by the end of 2026. But a failure with the New Glenn rocket, which is one of their launch providers, and a subsequent launch pad explosion pushed that whole timeline back to early 2027.
Space is so unforgiving. I mean, when your delivery truck literally explodes on the highway, your entire business timeline gets pushed back.
And Wall Street despises delayed timelines because it introduces execution risk. But what we are seeing right now in the technical data is this massive bullish divergence.
This is the part that feels like a tightly coiled spring. The stock dropped 60% because of the delay, but behind the scenes, there is heavy insider buying.
The filings show insiders purchased over 2.35 million net shares over a 90-day period.
That is a massive cluster of buying at depressed levels.
When the engineers and executives building the actual satellites aggressively buy their own stock after a catastrophic price drop, it is a very loud signal. They are putting millions of their own capital on the line because they believe the market is mispricing the severity of the delay.
But then, on the exact opposite side of that trade, you have the short sellers. Short interest has climbed to 21.7%.
It's the highest level of short interest since October 2024.
That means more than a fifth of the available shares have been actively borrowed and sold by investors who are betting the stock will drop even further.
Right. The bears are positioned for more downside. And remember, when you short a stock, your potential losses are technically infinite if the price goes up.
Because you eventually have to buy those shares back to return them. So you have insiders loading up and short sellers heavily betting against them. A coiled spring that has to snap violently one way or the other.
Exactly.
So what are the actual catalysts that force that snap?
The immediate horizon is densely packed. The single most important event is the August 5, 2026 launch of Bluebirds 11, 12, and 13.
And crucially, this time, they aren't using the New Glenn rocket. They are using a SpaceX Falcon 9.
Which is a huge validation of their multi-rocket deployment strategy. They aren't totally reliant on a single provider. If that August 5 launch is successful, it proves their manufacturing pipeline is working.
And then just 5 days later, on August 10th, they have their Q2 earnings call.
Yes, and this is exactly why traders rely on specialized platforms during high-density catalyst windows like this.
Right. If you're tracking a stock that could move 30 or 40% in a single day, you can't just hit refresh on a standard newsfeed. You need to organize the data.
Right. On that August 10 call, Wall Street will be listening for one specific thing: forward guidance. Will management reaffirm that the 45 satellite milestone is firmly on track for early 2027?
Any upward revision or even just a firm confirmation of that timeline could be the spark that forces those short sellers to panic and cover their positions.
Which means they have to buy the stock to close their bets, which drives the price up further, forcing more shorts to buy.
A classic short squeeze. But let's play devil's advocate here and look at the risks, the bear case. Because a 21.7% short interest isn't just retail noise. That is genuine conviction from institutional players who think this company might fail.
The primary risk is absolutely execution. We already saw the timeline slip to 2027. If the August 5 SpaceX launch slips, or if there are internal manufacturing delays, carrier patience could really wear thin.
Because AT&T and Verizon are operating in viciously competitive terrestrial markets, they cannot afford to wait forever for a feature they've promised their users.
And that brings us to the elephant in the room, or, well, the massive constellation in the room.
SpaceX's Starlink.
Right. It is entirely impossible to evaluate ASTS without addressing Starlink's direct-to-cell service.
Starlink already has over 650 satellites in orbit designed for direct-to-cell. They have 16 million users overall. They are fully commercialized right now.
They are massive.
Doesn't Starlink's huge head start and the fact they own their own rockets just crush ASTS before they even get off the ground? I mean, how do you compete with a company that launches a rocket practically every Tuesday?
It is the most compelling argument the bears have. Starlink has undeniably won the race to scale. But this is where we have to look at the technical specifications of both services.
Right, it goes back to the spectrum wave physics we talked about earlier.
Exactly. Starlink service is fundamentally limited to outdoor line-of-sight connections right now. If you are under heavy tree cover or inside a building, their higher band signals struggle or just fail entirely.
And their current direct-to-cell tier is primarily focused on text messaging and SOS.
Whereas ASTS, because they have that penetrating low-band spectrum and those massive 2400 square foot magnifying glasses in the sky, can push a 200 megabit broadband connection through the roof of your car while you're driving in a complete dead zone.
And ASTS is natively integrated with the carriers. You don't sign up for a separate ASTS subscription. You just keep your standard AT&T plan, and your phone seamlessly hands off to the satellite when you lose ground coverage.
Right. Starlink is incredible technology, but the addressable market for space-based cellulars is projected to grow to over $14 billion by the end of this decade.
The pie is getting big enough for multiple massive winners. Starlink offering ubiquitous, basic connectivity, and ASTS offering integrated, high-speed broadband.
That is the core of the bullish thesis. Starlink has the scale, but ASTS holds a structural, technological, and regulatory advantage that Starlink cannot easily replicate right now.
Okay, so bringing this all together for the final verdict. When we put everything into the blender, the massive tech moat, the $3.8 billion in cash, the 56% price drop, the heavy insider buying, but also the brutal execution risk, and Starlink looming overhead, what is the actual investment rating?
The analysis gives ASTS a bullish score of 7 out of 10.
A 7 out of 10, so that implies strong conviction, but heavily acknowledges the real dangers of orbital construction.
Exactly. It is viewed primarily as an asymmetric play. In the short term, heading into the August 5 launch and the August 10 earnings, it's a highly volatile swing trade.
But the long-term view is what's really interesting.
Yeah. The thesis argues for a multi-year hold option. If they successfully hit their 2027 deployment targets, they unlock the massive commercial revenue streams from AT&T and Verizon. At that point, they transition from a speculative construction project into a massive cash flow generating global utility.
It is the ultimate definition of high risk, high reward. You are betting on humanity's ability to build delicate, massive structures in the most hostile environment imaginable.
While burning $1 billion a year. Which is why you have to track this stuff carefully.
Absolutely. And as a reminder, please consider subscribing if you enjoyed this. And check out the description below for that special 14-day trial link to StockOracle. It's an incredible AI-aided stock research platform for navigating these wild frontiers, though again, always verify the data yourself.
Definitely. It's going to be a fascinating few weeks for ASTS and potentially a defining few years for global telecommunications.
For sure. And before we go, there's one final thought I haven't been able to shake. We spent this entire talk looking up at the sky, focusing on the race to dominate space.
Right, the new frontier.
But let's look back down at the ground for a second. We have spent decades and billions of dollars building terrestrial telecom towers. Those ugly metal trees lining our highways, the antennas on top of apartment buildings.
Yeah, they're everywhere.
If space-based cellular broadband truly succeeds, if companies like ASTS completely eliminate global dead zones by the end of this decade, with a seamless connection raining down from the stars, what does that mean for the billions currently invested in ground-based towers?
That is a very disruptive question for the legacy players.
Could the vast majority of our current terrestrial cellular infrastructure soon become totally obsolete?
It's definitely something to mull over. The physical landscape of our connectivity might change just as drastically as the digital one.
Imagine looking at an empty plot of land, not to figure out how to build a new tower, but to figure out how much it will cost to tear down the cell tower that nobody needs anymore. We'll leave you with that to think about. Until next time.